pick up the pencil. You're about to listen to the Savvy Radio Show. Learn from real-life real estate investors, experience revealed with the Savvy Landlord as your host.
All right, here we are back in the studio. It's going to be a great day for you because I got a special treat. A lot of people don't know about the people that I do work with on a regular daily basis and actually for years. And I am super tickled to introduce a great friend that has bailed me out on a lot of legal questions and owner finance questions and listing my apartment building, getting me apartment building, selling houses for me, the jack of all trades. He should be international. Anyway, Dutch Revenboer. That's right, Dutch Revenboer. Did I say it right?
Yes, you did.
Okay, finally. And we are going to talk about a plethora of information for you as a real estate investor need to know, from owner finance, maybe even contract for deed, to lease option, to just getting in real estate in general. So I met Dutch, man, I think at least 10 years ago at the Real Estate Investment Club when it was crazy awesome with tons of skilled people. And I actually looked up to Dutch. Dutch was the only realtor that actually was a real estate investor, active in real estate, purchasing his own property, financing his own property. The only realtor that I could find that was actually doing subject twos, had 10 subject twos at the time. And we were randomly bumped elbows at one of the meetings, and he was selling stake signs for bandit signs out of his back of his trunk. And I bought a case of stake signs for my bandit signs, and next thing you know, he is my go-to guy for everything. And if you don't do anything, I get this question all the time: how do you do a contract for deed? How do you do a lease option? How do you do all that stuff? I just hire Dutch. I pay Dutch, depending on how complicated the situation is or how big the house is, from $1,000 to $500. I call Dutch. He does the paperwork. He slaps me in the face. He's like, "You could do this. You don't need me." And I'm like, "I know, but you're better than me." And he's just been a great source. So anyway, that's Dutch Revenboer, all the way from Edmond, Oklahoma, here, Oklahoma City. He's got a great, wonderful story. So Dutch, let's just start with the basics. How in the world did you get into real estate?
Well, thank you, Stephen. I appreciate that introduction. That was great. The story, I became an investor in 1997 because I was no longer employed, and I was looking for a way to make money, like a lot of us are. And so staying up late one night, laying in bed watching TV, and a guy named Carlton Sheets comes on TV, and he offered a little course for $297 or something, and I could pay it out over about 6 months. And so
that's awesome.
My wife says, "Yeah, go ahead and get it." So I bought the course and read the thing in about an hour and a half, and went through it and started just pounding on doors based on what was in that course. And there was a lot of stuff in there I didn't understand. I didn't know what I was doing, but I was desperate, and I went out and started just doing stuff,
right,
even though it wasn't right. And I didn't comprehend what Sheets was trying to teach. And, of course, I don't think it was presented in the best manner. But none of that matters. What happened is I ended up hooking up with another guy, and we bought a house to rehab and flip. And we did that and didn't really make any money, but didn't lose any money. But I gained a lot of experience. And about that time, I got a real job for ESPN, moved back to Oklahoma, and then with that job I had some extra time, and I had the taste in my mouth for real estate investing. So I started buying houses. And again, at that point, all I knew how to do was buy and flip, rehab and flip. So I was doing that. I became a realtor in 2001 because I was having trouble finding a realtor who understood what I wanted to do as an investor. there's a gazillion realtors out there, and they'll help you buy or sell a house if you do most of the work and put a sign in the yard and get it done. But I got burned on a couple of deals and figured that I could burn myself. Why pay somebody else to do it? So I went ahead and got my real estate license. And again, this was in 2001, and really needed access to the MLS for comps and that type of thing, because at that point we didn't have the county website that we do now in Oklahoma County. We didn't have Zillow and Trulia and all these other wonderful products that help you comp a house. So that was another reason that I became an investor.
Cool.
So
now you worked from the corporate world. You traveled the country working for ESPN, and then all of a sudden you've been in real estate for over almost 20 years now, right?
Since 2001, so that's 15
well, as
years.
a realtor, but you got the course back. Well, you were doing
97,
both.
Yeah,
you were
so
doing
it's
both.
almost 20, yeah.
Do you miss the corporate world at all?
No.
And you haven't gone back. Okay. So what drew me to you the most is that you're very creative in your acquisitions and finding deals, but also getting them financed. And every time I talk to a realtor about of course I read Carlton Sheets, but I actually read Nothing Down by Robert G. Allen. Oh, you can buy a house with no money down. Okay. Yeah. Every realtor I ever talk to says it's BS because I'm assuming now, since I'm educated, they don't get their commission. Why and how, and you sustain being passionate about owner financing. I mean, you're the only realtor that I know today that actually will submit an offer, a real Oklahoma State real estate offer with owner finance on it. You will find MLS listings that say owner finance. How are you passionate about that? Why are you passionate about that?
Well, again, back to my original story. In 1997, I was unemployed and didn't have two nickels to rub together. So if I was going to start buying houses, I had to be creative about how to buy them. And that's what appealed to me with Carlton Sheets and Robert Allen's books, No Money Down. And I think the first lesson I learned from those is no money down does not mean no money down to the seller. It may mean not your money down. There are other ways to go about getting down payment money. So I have bought houses no money down, but it's not the easiest thing. You're not going to buy one a day, but it can be done. But it's easier if no money down means not your money down.
Sure. All right, let's get into some owner finance. Explain some owner finance stuff to me. You were mentioning it earlier off the air.
Well, owner finance, are you referring to as buying a house via owner finance or selling one?
Well, mainly people that are listening to the show usually are trying to get into real estate for the first time, or they have a few rentals, and of course people that have a lot of rentals still want to buy houses owner finance. So explain. Okay. I want to buy a property because I don't have credit. I don't have.
Okay.
That's the number. I don't have money. Okay, so. Definitely tell us about some of your sweet deals. I know you got some crazy deals that you've done, but let's just go through the basics of owner finance because a lot of people don't know that.
Okay.
So let's get them.
Well, buying a house with owner financing can be a great way to buy a house, especially if you don't have good credit or don't have any or not a lot of down payment, because some owners are desperate to sell. They're motivated sellers. And you can approach them and say, will you finance the house? I'm going to buy it, and then what I'm going to do with it is either live in it or I'm going to turn around and resell it. But obviously you don't want to get crazy telling them that you're going to make a ton of money, because then they're going to want to do that themselves. But that's a different course. But one of the things I learned is when you make an offer on a house, you should give, and you're dealing directly with the seller, not through an agent, is you make 3 offers. One that you want, one that you wouldn't mind having, and one that, again, obviously you don't want to make offers you don't want for them to take, but you want to give them some options.
So like what you mean is like, one's an all-cash offer, one's a partial finance offer, and then another offer is all owner finance.
Exactly. That's a perfect example. Of course, the all-cash offer would be a super low-ball offer because you've got to come up with the cash.
60, 70, 50%, somewhere around there.
You know, as low as you figure you can go. I mean, that's if you don't have the cash and you don't have the cash lined up, that's a great way to make an offer and hoping that they don't take it, because if they do take it, then you got to go find that cash. But so the price needs to be low enough that you can wholesale that deal.
True. Okay. So owner finance person, so submitting 3 offers at one time. And in your wisdom, how many times have people accepted like 1, 2, or 3? Is it random or?
Yeah, it more on what they need. Depends on who the seller is. I mean, I've bought houses from tired landlords.
And you sold.
And I've sold a few to a tired landlord. But if they're just a tired landlord and they don't really need the cash and they understand that you're trying to get in the business, maybe, they're a lot of times willing to help you with low down payments, low payments, etc. I've bought houses with low down payments, or, I've actually financed the down payment where I give them a note, I give them some cash and then I finance the rest of the down payment. In the meantime, I get possession of the house and I start getting cash flow out of that. So there's a lot of, you need to be creative when making your offers. The key to that is talking to the seller and finding out what they need, what they want.
Okay, now, since you're a realtor and you have to deal with other realtors, how do you handle a realtor that doesn't want or accept owner finance? I mean, how do you deal with that? I know it's a tough question. So you're the realtor, you're representing a buyer, and the buyer's like, hey, I got $10,000, I want to buy this specific property, but their listing realtor is bucking that. Have you ever converted a realtor, try to educate them? Or because I'm assuming that listing realtor thinks they're not going to get paid. Because I mean, I always envision, what's their commission? Say their commission's $3,000. Look, I'm going to put $5,000 down. $3,000 goes to the listing agent for their time. $2,000 goes to the seller, and then that seller. Does that happen? How do you overcome that with a listing agent?
It's not typically an issue because if the seller has indicated that they're willing to do owner finance or lease purchase, the listing agent will put that in the listing. So we know that. I can actually do a search for all houses for sale currently today that offer owner finance or lease purchase.
Is there a lot of those, or are they rare?
Right now they're pretty rare because houses are selling so well for cash. The market is really good. 3 years ago, when the market was sucking, then there was a lot of them. Sure. Because owners couldn't sell their house for cash, so they were willing to sell on terms. So it's directly related to how the housing market is going at that particular time.
All right. Now, you mentioned earlier about lease options. Tell me about it. Someone may not know what a lease option is. Let's talk about that. Tell me about that.
Stephen, if you don't mind, if we can, let me just go through the different ways that you can buy a house.
I'm excited. I'm excited.
Okay.
Go.
That way, rather than jumping around. So the very first way, obviously, is all cash. Okay?
Sure.
You got a big bucket of money, you just go pay cash for a house. The other way a seller gets paid all cash is you go get a note and a mortgage through a bank or some type of lender. If it's investment properties, typically you're going to have higher down payments, 20%, 30% down. They're only going to loan on the purchase price 70% or 80% of the purchase price or the loan to value, the value of the home. So that's the other way. Now, again, depending on the banking situation, which is always fluid, and you should always be talking to your banks and different banks about what is available for financing, because what you cannot do today, depending on what happens in the banking industry 6 months from now, you may be able to do it. So
True.
Just because you've been told no doesn't mean no forever.
And just like the Dodd-Frank law changes things, people are all up in arms. I can't owner finance anymore because of the Dodd-Frank law.
Exactly. And the inverse of that is true as well, in that what you can do today, down the road, you may not be able to do. And I've got a perfect example of that. I was at one point buying houses at sheriff's sale, and I was borrowing 100% of the money because I had a really good relationship with my bank. I would I'd go down and bid on a house, and then if I got the bid, I would call my banker and say I just bought a house, and he'd look it up on the county and run some numbers, and he'd say, okay, yeah, it's a good deal. So then they would create a note. They would give me the 10% down, which I had to have within 24 hours. I would take that down and give it to the county, and then 30 days later, or 3 weeks, whatever, I would sign another note for the rest of the purchase price plus some of the fix-up money. I'm just saying, at the time, this was back in the mid-2000s, I could do that. And so, and I would put all that in the bank, and then I would buy the house, fix it up, and resell it. Well, one day I went to sheriff's sale, and I bought a really cool house, and, raised my thing, and I was the winning bid. So I pick up the phone as soon as I leave the courthouse, and I call my banker. And I said, hey, I just bought another house. And he says, oh, I've been meaning to call you. We don't want to do that anymore.
And why not?
Well, it was we were moving into 2007, 2008.
Subprime.
The banks were starting to see that, money was tightening up.
That's funny.
And so, again, what they do today, they may not do tomorrow, and vice versa. So just keep that in mind.
How do you stay abreast of all this? How do you know that things are going to change? Is there like a website, or how do you keep? I mean, I know you're very educated and you like to learn and grow. Is there, for someone that wants to know about that stuff, how do you keep up with that?
Well, one of the things I learned about real estate, Stephen, and you and I are a perfect example of that, is real estate's all a relationship business. It's all about having relationships. And so you cannot do this business sitting at home reading a computer, and you have to be out talking to people.
Sure.
So I'm out talking to bankers, lenders, buyers, sellers, investors. I'm talking to people all day, every day.
That's true.
And that's how I learn, is just through osmosis.
Well said. Two laws that have changed. The new ordinance, the 1013, about the utility bill. I learned that from someone else. So we can talk about that later. And the new taxed repairs under $500 in 2014. You can only repair something. I don't know. But this is not the radio show. But I learned all that from just talking to other real estate investors that obviously have no time, and they know all this other little jazz that I need to know. So get out there, network, meet people. Dutch comes to a lot of the classes. Come meet him in person. We're going to release Dutch's number, and Dutch and I are going to do a class here pretty soon on owner finance, because I think it's critical and important to build your portfolio with little money from institutions as possible. Even though I love banks, but hey, owner finance, what's a positive thing on an owner financed?
Again, you don't have to jump through all the regulatory hoops with the banks, and most of the time they're not going to pull your credit, so they don't really care so much about your credit.
How about defaulting?
As far as if you default on the note?
Yeah, you can just walk away.
You can.
And I have. An investor sold me a property, and I owned it for several years, and I realized I'm going nowhere. And I called him up, and I was like, hey, this isn't going to work out. He was like, no problem.
Right.
And I walked away, and I wasn't scathed. It wasn't on my credit. Like, hey, I walked away from a property. I had to at that critical part of my life. I mean, I'm not saying that's a positive, but it's I'm not going to be indebted for the rest of my life.
Well, yes, and that, I mean, if you can work something out with the owner and give them the property back and walk away, yeah, they're not going to report you to the credit bureau as well. So at owner finance, whether it be a note and a mortgage, contract for deed, rent to own, has a lot of benefits to it. Mostly easy, and it's easy to do the transactions. You don't have to jump through a bunch of hoops and that type of thing. So We talked about note and mortgage, or going into a bank and getting a note and mortgage, but owner finance, an owner can give you a note and a mortgage, okay, just like a bank can. Typically, that's only done when the owner owns it free and clear, although you can do what's called a wrap. They fell out of favor back in the 80s. They're not done a lot.
What's a wrap?
A wrap is one mortgage that wraps around another mortgage, an existing mortgage type situation. So in this situation, that doesn't really apply. But if an owner is selling you a house on a note and mortgage, but he has a mortgage and a note on it, an underlying, then that doesn't wrap. I apologize for that. But it subrogates that mortgage to the one that he owns. So even if you paid yours off and he didn't, his is a first mortgage on the property. So
and I've gotten burned that way.
Yeah, you got to be careful with that. The other way to buy a house is and it's done a lot in the Midwest and down here in Oklahoma. Some states don't allow it. Luckily, Oklahoma does, and that's a contract for deed. It's also called an installment land contract or an installment sale. Basically, the buyer, which would be you, if you can convince the owner to sell you the house on a contract for deed, you have all the rights and benefits of ownership, including the tax deductions, etc. The only thing you don't get is the deed until you fulfill the contract. All that really means is you cannot go out and get a second mortgage, a second note. No liens or judgments can attach to the property that if caused by you because you're not on the title. So a note and a mortgage and a contract for deed essentially are somewhat the same, but a little bit different on how it's done. But they both convey all the rights and privileges of ownership.
So as an investor, should I purchase that way or should I sell it? What's the most common for a real estate investor?
Well, I've done both. I like to buy them on contract for deed, and I like to sell them on contract for deed.
Okay, what's the positive for you to purchase as an investor a contract for deed?
Again, it's
No
owner
banking.
financing.
Yeah, no banking.
So they're easy. They can actually be done on a single piece of paper. Although I don't recommend that. I don't recommend one-page contracts, but it can be done. So they're very, very quick and easy. A contract for deed is a promissory note and a mortgage kind of all wrapped up into one document, if that makes any sense, as opposed to a traditional purchase, which is 3 documents: a promissory note, a mortgage, and the deed.
So okay. So with a contract for deed, it's also easy just to dissolve the situation as well. Right?
Well, again, if you default to your seller, he is obligated by law to foreclose on you in Oklahoma. Now, not all states are that way, but Oklahoma treats a contract for deed just like a traditional note and mortgage as far as when subject to default. So there is a foreclosure thing. So the person in default can be foreclosed on.
Okay. All right, what else? Keep going. You're doing a good job there.
All right. The other way you can buy a house is what I call a lease purchase or lease option. It's called a lot of different things in this industry, and people keep making up their own definitions. But in my opinion, it's a lease option. Or a lease purchase, if you want to call it that, and it's 2 documents as well. It's a lease, and
like
then
a regular residential lease,
right?
Okay,
and you buy an option to purchase the property at a future date at a specific price. Okay,
kind of like the stock market.
Kind of, you lock in a price and you lock in a time frame, and you can use that time frame to arrange other financing to finance it out. But you've locked it in. The seller can't sell it to anybody else, and you've locked in the price for a specific amount of time. In the meantime, you're leasing the property from the seller, and if you do it right, your lease will have a sublease paragraph in it where you can then release the property to somebody else, sublease it, and again, generate cash flow on a monthly basis for yourself.
So you can, almost like a sandwich.
Pretty much.
You slide in there, get the seller to do a lease purchase, so they're happy because they get some sort of income. Then you turn around and you lease it, in this case, sublease it to someone else,
right?
And you get the little spread in the middle.
It's like a lot of ways people make money. Banks, they borrow money and turn around and relend it to you, and they make their money in the middle. A contract for deed or a lease options is the same kind of thing. If you buy it on a contract for deed and either lease it or sell it on a contract for deed, you're just sitting in the middle, collecting your little piece of profit in the middle. So yeah, that's a great way.
All right. Now there's one other creative way. Are you done? Because there's some more we can talk about.
No, go ahead.
Okay. How about subject twos?
Okay.
Let's talk about subject twos. I know one of my mentors was really big on it. In Kansas City, it was really huge. If you can, we want to talk about some stories, but tell me about the story of a subject two that you have. First of all, tell people about what a subject two is, and then go into the story that the house burnt down and it was a subject two, and how that was a positive situation. So let's go into what's a subject two.
All right. Subject two is a form of owner financing. It's a little bit more rare, and they're not as common because sellers don't like to do it
because they want to cash out.
Well, they want cash, but basically, a subject to is, let's pretend Stephen has a home that he's living in, and he's fallen behind in his payments, and he's about to lose it to foreclosure. But he's got a really nice note on it. Say it's a 30-year FHA at 4%. He still owes 24 years left on it, and his house payment's $600 a month. He gives me a call and says, I need to get out from underneath this house. And I go over, look at it, and it needs a little bit of work, and Stephen's pretty desperate. I can kind of tell he's motivated. So I say, okay, Stephen, here's what I'll do for you. I'll give you $500, $1,000, $2,000, whatever I feel like I can get away with. And I'm just going to start making your payments for you.
Or get you caught up or whatever.
I'm going to catch it up, and I'm going to start making the payments. Okay? But you have to deed me the house to do that. So Stephen deeds me the house, so now I'm on title, okay? But the note and the mortgage are still in Stephen's name.
They're existing. So
when
you say deed over, is that like a quitclaim deed or?
You can do quitclaim deeds. I prefer warranty deeds, but just because they have a little more legal oomph behind them.
Cool.
I mean, I could deed you the Brooklyn Bridge today, okay?
Right.
That doesn't mean you own it. It just means that if I owned anything in it,
truly,
I gave it to you, okay?
And then I would.
But there's no proof that I owned it. A warranty deed says I warrant the fact that I have the right to sell it. But back to subject two, so that's you're taking over you're taking over a property subject to existing financing, okay? And you're obligating yourself to make those payments, but you are not on the note, so you're not legally liable. Ethically and morally, you are, because you've promised that seller to make those house payments. But your credit is not impinged. You could have zero credit or bad credit, it doesn't matter. You've taken over someone else's note.
And now you have several of those, right?
Yes, when I can find them and convince a seller to sell that way, that's one of the best ways. But
because
again, it's not
no money in the game.
Yes,
and you just acquired an asset, hopefully with equity in it.
Exactly.
And you're just writing Bank of America a check or whatever the institution is. I have not done one yet. I've heard great things. Of course, I've heard some horror stories about subject twos. It's a wonderful instrument to acquire a house. I know some investors they swear that's the only way they want to get into the game.
It's a great way to buy a house if you can find the right deal. There are some subject to houses that aren't worth taking because you're going to end up spending more money on them than they're worth.
Yeah, I actually had a realtor call me with one that they were desperate. It was a lady. It was on the south side. I usually don't buy on the south side. I looked into it, but she owed more than it was worth. Like it was $100,000 house. I think she owed $105,000, and it needed some TLC, and I was like, "There's no way."
Right.
I'd be taking the giant risk, and especially who knows what the economy.
Yeah, you have to be real careful. Just because you can take it over with no money down and take over the payments, you may be obligating yourself to a bigger headache. So I've turned down pretty much free houses before where they've just asked me to take over the payments, but even there it wasn't worth it.
And a lot of people don't know about what a subject to is, especially.
Well, let me give you a story about a subject to that I took over. I had a lady call me, and she was like 2 months behind, just about to go to 3, and of course, when you go 3, then they start filing foreclosure, and she knew she was in trouble. So, a little house down in Moore. So I went down there, met with her, walked through the house. It was in pretty good shape. I didn't need a lot of work. I mean, she was living there. She was happy. So, but there wasn't a lot of equity in this property. She had paid $90,000 for this little house and still owed $86,000 on it.
Yeah.
So there's no equity there. But yet it's a house that's going to rent for $800-900 a month. And her house payment, she had a really good FHA loan with a real low interest rate. So the house payment, principal, interest, taxes, and insurance was only about $650. So I knew I could rent it for $750, $850, maybe even $900.
So $100 to $200 worth of
exactly.
Spread. Okay.
And so I was going to get some instant cash flow and not have to put any money in the house. If I remember correctly, I gave her like $2,000.
And she just left.
And she just signed over the house to me, and I took it over subject to. I turned around, didn't have to do hardly anything to the house, and I turned around and sold it on a contract for deed.
Oh, man.
Yeah,
It's
exactly.
a little complicated here.
Got $5,000 down, $900 a month on a 30-year note with a 5-year balloon. Okay? So now I'm cash flowing $250 a month. I got my $2,000 back. I put $3,000 in my pocket, and I'm cash flowing $250 a month.
And I don't have to do anything.
And
no calls, no toilets.
And that house is not on my credit. You know, I didn't have to borrow money. Luckily, I had the $2,000, but I'd have gone and borrowed it from somebody else
Borrow
if I
it from
could
me.
have. Yeah, exactly. So there are deals like that. They're few and far between, but you gotta kiss a lot of pigs before you're gonna find one. But they are out there.
Okay, is that the one that house burned down?
It did burn down.
Okay, so that's all great. Everyone's happy, and then what happens?
Well,
you get a call in the middle of the night.
It's a different story. Yeah. First of all, the people that were buying it from me had kind of slowed down their payments, so they were a little behind.
Like a month,
and
2 months?
I was about to have a conversation with them anyway.
Drop the hammer.
But I get a phone call one morning early, about 6 o'clock, and the house had caught fire.
Oh man!
And so I said, okay, I'll come down there.
So what were you thinking? Were your heart pounding?
No.
Was this your first burnout? Or
this is my first one. I hadn't done that before, but I don't get too excited until I see it. So I go down there, and the gas line to the fireplace had broken, and they had a fire that night. It was during the winter, and they'd gone to bed, and apparently that caught fire. And so the fire went up the wall behind the fireplace up into the attic.
Oh, man.
And, of course, they immediately, the smoke alarms went off. They called the fire department. The fire department came out and put the fire out, which is their job. The actual fire damage to the house was estimated at about $25,000 just for some new trusses, some new framework around the fireplace, new gas line, that type of stuff. And, and some melted ducting up in the attic. The fire department, whose primary job and only job is to put the fire out, did another $65,000 worth of damage putting the fire out.
So this is a $90,000 house with $85,000 worth of repairs?
Exactly.
Oh, man. On one side of a house, like one corner of a house.
And now by this time, it's we're about 3 or 4 years into this deal. And
they've been paying?
Yeah. And so my principal is down to about $82,000. So...
Which you never paid down. Was free money.
Yeah, exactly.
Right.
Well, the renters were paying it down. I was making the house payment underneath it. So,
well, that's what I mean.
So,
okay.
luckily, I got a really large check from the insurance company and was able to
do all the repairs.
No, I sold the house to another investor.
Wait a minute. So what happened to the people that were in there with their house burned?
Well, they
down?
were leaving anyway. Remember, they were.
This is a great fire exit. So they had to leave anyway.
When I
like,
explained to them that, and again, now, this is a lesson, people, that you need to know whether you do a lease, a contract for deed, whatever. When I walked in the house, I'm walking on 6 inches of oatmeal because every ceiling in the property had gotten wet from the fire department, and it all caved in, along with the insulation and everything else. So you're squishing around on this nasty stuff, and
looking around,
and it's all on top of all their stuff, all their furniture, their TVs, everything. And so I said, "Oh man, this is really bad." Now,
thank God you have insurance.
Thank goodness you have renter's insurance, right? And they looked at me and like with this deer in the headlight look, and it was like, well, remember when I sold you the house, I explained that my insurance covered the building
structure,
but not your contents. Well, no, we don't remember that. Well, I just happened to have my folder with me, and so anticipating that answer, I opened it up, and on the very top sheet was the hey, you need to have renter's insurance document that I had them sign when they bought it. I said, well, isn't that your signature right here where we talked about renter's insurance? Oh, yeah. So you don't have any, right? No.
You're
SOL. Well, I'm really sorry. The insurance company is going to help me fix the property, but it's not going to pay you anything, okay? And while the house is being remodeled, you still have to pay me rent.
True.
So, and it's going to take me 90 to 120 days to rebuild this house, and you're also almost 3 months behind. So,
did you refund their deposit?
No, they left.
So, like, were they disgruntled? Were they like, "F you, Dutch, you suck. Our house burnt down. We're on TV. You're a terrible landlord. You're gonna go to hell."
No, actually, they left quietly in the night. So,
all right, cool. So, all right, so these poor people that didn't have insurance, which, hey, this might be the podcast or radio show, whatever you want to call it, that you should go get renter's insurance. If you're a renter, if you're not a renter and you own a building, get insurance. It's cheap. Okay, so these people leave. Poor people, I'm sorry. Then what?
Well, I'm looking at a really major rehab here. I mean, it's a total gut because all the ceilings are gone. Half the walls are wet and this type of stuff. So I ordered a clean out. So we got it all cleaned out. And now I'm down to studs and this. But I had I knew an investor. And he said, would you sell me the house? And again, this was a subject to house, right, that I took over. I don't
technically,
morally and ethically, I owe the bank, but I could have walked away and
took the insurance. Well, whose the name was the insurance in?
Well, the insurance company's the insurance was in was in the trust and in the mortgage company's name.
Okay.
So the insurance company wrote a really large check to fix it, but this investor said, well, if you'll pay the note down some, I'll just take over the rest of it. And so I took part of the insurance money and paid the note down to a more reasonable note, then basically sold the investor the subject to that I already had. So now he has a property that he does
on a subject to
because I just transferred the ownership to him. The original lady's note and mortgage is still there, but we'd paid it down, and I was able to pocket a pretty nice little profit.
What number?
I was about $35,000.
That's awesome, and you had 3 years of payments of $250.
I did well, minus the 3 they didn't.
And you
pay.
had a little diarrhea though when you walked into the place.
Oh.
Squishy. You knew. I mean, your heart probably dropped somewhere.
It was just nasty looking. The fire department does a lot of damage because, again, they don't care about property values. All they care about is putting the fire.
But let's get real here, homie. You had to have some sort of like, okay, I got an $80,000 mortgage. I don't, the insurance could be kind of sketchy. You didn't have any kind of butterflies.
I don't remember that. No.
You freaking.
I might have, but I don't remember that.
You're a dork because you're human.
I don't remember that emotion, but it was probably there. Gee, I hope.
All right.
Actually, I was hoping that when the fire started, if they'd gone like to Denny's for breakfast and then called the fire department, it would have been even better. But
$30,000 payday is a good number.
Yeah,
Just
it wasn't
shut
too
your
bad.
mouth.
But if it had totaled the house, I would have made even more money. But it wasn't quite enough to total it.
All right, so we're gonna wrap this up. Man, Dutch, has been a pleasure for you to be on the show. I mean, I know that we're gonna have a great class coming up on owner finance and creative financing deals, and I just love teaching with you. What advice would you give to a rookie investor out there that, I have no money, and then I have another question after that, and the other question right after that would be, how do we find realtors like you out there? How do I pre-qualify a realtor? How do I build relationships with very rare real estate and realtors that are investors? So let's start with, what advice would you give to the rookie out there?
Well, in short, the first thing is just do it. I've met so many people through the years that just get paralyzed, paralysis by analysis. They read, they go to classes, they go to boot camps, they do this and this, but they never pull the trigger on a deal. Hey, you're going to win some, you're going to lose some, but you got to get out there and you got to be in the game. Okay, so you got to be willing to make a deal. Now, it's harder, obviously, if you don't have money or credit, but it can be done. I'm a perfect example. I was unemployed, didn't have any money to my name, and I started buying houses. It can be done. You just got to do it.
So that was your motivation back then. You had nothing to lose, and that was my motivation.
Exactly.
I might as well give this a try. Yeah. And then, did you ever you were successful in ESPN, traveling the country, that you'd be a real estate investor? Did it ever cross your mind?
Well, I was an investor before I went to work for ESPN. So and in the back of my mind, it was always, I'm going to continue to be an investor and grow my portfolio. And regardless of what happened, because I had spent many years in the corporate world, and ESPN was pretty apparent to me was going to be my last real job, and so I was going to ride that pony as long as it would ride, because they were paying me a whole lot of money, and it was a pretty cool job, but I knew it wouldn't last forever, and so I continued to build my real estate business up. First as an investor, and then as I transitioned into a realtor.
All right. Speaking of realtors, I was trying to keep track. I really want to do a class on realtor, like a luncheon on how to communicate with a realtor. How does it work? A lot of people don't even know how you get paid. They just think you work for free. You're on salary somewhere. That you are a commission-based individual. And I think it's rough to be a realtor. There's a lot of no's and little yeses, and you got a lot of finagling and orchestrating closings and working with mortgage brokers and all kinds of stuff. So how do we find people like you in other markets, like say that someone's listening from Dallas or New York City or wherever? How do I find a real estate investor realtor that's not selfish? Because I know that when you bring me deals, and I know you can buy these deals, and I know that you're sharing the wealth, but I know real estate investors that are realtors that are just straight for themselves. They have access to the MLS. They're even flipping deals, kind of wholesale-y, that I think is a little on the edge of ethics. How do we find a real estate investor realtor like you?
Well, I agree with you. Being a real estate agent is not the easiest profession, although I think the general public thinks it is, and we just sit back and collect checks. As an investor, for whatever reason, the investment community seems to think that realtors aren't worth having around, and they think we're easy money. But at the same time, these same people that are wholesaling are making more money on a wholesale deal than a realtor would, but yet they begrudge us our little 3 or 4% that we make. I'm not sure why that is, but so be it. As far as finding a realtor, first I would look to the investor community that's around you, your investment clubs and that type of thing. You want a realtor who is an investor themselves, But on top of that, as Stephen mentioned, you want one that has some integrity and some ethics. And that's just a judgment character, and then references and referrals. Find somebody that that you can trust and do business with. Perfect example, I had a client a few years ago, and we went to look at a house that also had commercial potential. And we walked through it, and it was pretty much just studs, needed a ton of rehab, and he made a real low ball offer. And so I was driving home to write up the offer, and I called my client, and I said, you know, I think this property is worth more than that, and I would like to buy it, and I'm willing to pay more than your offer, but I'm not going to do that without your permission. And because that wouldn't be ethical.
Sure.
Right? Because I know what his offer is, and if I outbid him and didn't tell him, then that wouldn't be ethical.
And I have been in deals like that, just so you know, that I've gone back to a deal and I got trumped on, and it was the freaking realtor.
Yeah, and that's
happened to me more than once. I'm just telling you right now, that's happened to me more than once.
Unfortunately, my client agreed to that and let me make an offer on the property.
And you got it?
I did get it.
Cool.
Which I just sold it a couple of weeks ago to a friend of ours.
That's right, Mr. Nachatello.
Anyway, so ethics and one who understands the real estate or investing business are the two primary things that I would look for in a realtor.
Awesome. Well, people always ask me, who do I work with? And it's Dutch Revenboer. Would you mind giving out your number? I'm going to put you on the website and a link. If you can't remember this podcast and you're driving, go to the SavvyRadioshow.com. That's Savvy, SAVVY, radio, RADIO, show, SHOW.com. And we'll have Dutch's information up there. He is a wonderful realtor. I've used him for, more than almost 10 years. I can't remember. I've actually purchased an apartment building with Dutch. And I love that he's always up front and says, that's not, when I tried to sell the property, he's like, I don't like commercial. And he helped me with another realtor, and I sold that property. And I always feel indebted to Dutch. He takes my call. If you're serious about it, don't waste Dutch's time and call him up. Hey, I'm a real estate investor. I watch the videos, and get pre-qualified, get some funding in order. At least don't try to put out 100 creative financing offers, because you're just going to burn a lot of time. And he is limited in his time. I'm so thankful that he came on the radio show today. But Dutch, give your name, your email, your phone number, your whole deal.
Well, I would love to work with you guys if you're serious about buying properties. My name is, again, Dutch Revenboer. I'm with Flatiron Realty Group out of Edmond, Oklahoma. My cell phone is 405-590-6563. You can voice or text me at that number. And my email is dutchsellsokc@gmail.com.
dutchsellsokc@gmail.com. And your phone number is
405-590-6563.
All right. It's been a pleasure, Dutch. Can't wait for you to come back and we have a class together again. Keep it real. Keep it financially free with freedom with real estate. Have a great day, and whatever you do, buy assets.
Thank you.